are in listen-only mode.
Hello, good afternoon. Welcome to this Midweek Market Outlook webinar. I am Devarsh and I am joined by my colleague Nagaraj. Hi Nagaraj.
Hi, welcome to Midweek Market Outlook webinar.
Okay. So today is a very important market update webinar which we are conducting. So first, I'll discuss about what we have done this week, what are the calls which we have issued, and then I'll hand it over to my colleague Nagaraj, who will share his views from short-term technical perspective, and then in the end, I'll try to summarize our market outlook for the short term. So this week we have issued two, out of which Tirumalai has been already booked. So one new MTF call is open for the investments trading, that is alkylamine. So those people who are looking for opportunity to increase the MTF book or wants to leverage the BSPL facility, one more idea has been presented is the alkylamine. On the fundamental side, we have issued three new ideas: Spandana, Capilin Point, and BEPL. Uh, Let me go through these again with you. So first, in alphabetical order, BEL, Bharat Electronics. We know that it's a defense PSU, and they have been accumulating a large order book. More than 68,000 crore order book has been accumulated, and this is likely to drive growth. So we are asking investors to buy near 182 and 186 on dips between 165 and 169 for the targets of 202 and 218. So that's the first fundamental long-term investment idea today. We have released recently. We have released is BL. Second one is the Spandana Spurti. There, it's a geographically diversified NBFC operating in an MFI sector with almost AUM of around 10,000 crores. They have been expanding quite rapidly with keeping the asset quality under check, and they are improving, and that should lead to re-rating. We are asking investors to accumulate between 1125, 1145 is the first range, and the on declines around 1115 to 1015 to 1035 for the targets of 1242 and 1340. So that's the second idea. And third, obviously the Capilin Point, the pharmaceutical company is in limelight lately. So that should have been second, but anyway, 1352 to 1373 range and 1216 on declines. Two tranche we need to accumulate this for the targets of 1492 and 1585. The Capilin Point is into formulations, and they are basically targeting only 15% of the revenue from the US market. Their strategy is to look for opportunities in the Latin American and African market, where we see a good 15% CAGR growth in next 2-3 years, and that's why we have recommended these ideas. So three ideas: BEL, Capilin Point, and Spandana are our fundamental ideas this week. Now we have, apart from this, we have also issued one more report which I would like to show the outlook for annual uh, and 2024 SIP picks and our outlook for the year. First, let me talk to you about the 2024 New Year SIP picks. So, like last year, we have issued a new 9 ideas for as a New Year pick, and all these are available as one of the baskets. So you can just click on 2024 Super Pack basket, and all these 9 stocks can be bought in a one click. The stocks are as shown in your screen: Adani Port, Axis Bank, Bajaj Finserv, GAIL, Grasim, Info Edge, Infosys, JSW Steel, and Pidilite Industries. We have issued also a detailed report which I am sharing with you. Complete information about these companies, why it is worth investing, and on one click, when you click on this button, you can also buy these stocks individually or start an SIP into this. Apart from that, we also issued one yearly report where we have discussed what happened in the year 2023 and how 24 is looking like. So I would request everyone to go through these reports where we have given our detailed analysis of our outlook for the year. It's a comprehensive 50-page slide report where we have discussed not only the various sectors, the macroeconomy about India and abroad, and also discussed the stock picks. So these are the recent reports which we have issued, and I hope all of you will go through them. Now, for the shorter term outlook, I'll invite Nagaraj to take us through technical analysis. Over to you, Nagaraj.
Thank you, Devarsh. Hi, friends. Is my visible?
Yeah, it's visible. Go ahead.
Yeah, is my screen visible? Okay. Hi, good afternoon, friends. Today we'll discuss about the technical aspects of the market. We'll discuss from smaller time frame to larger time frame. We'll discuss about the sectors and what has happened in the last couple of sessions and what is the outlook and all those things. To start with the smaller time frame Nifty charts, this is the Harley chart. Friends, what we can observe is a more of a downward corrections and range bound action. There was a sharp decline was missing in the last 3-4 sessions. We have seen declines in the as per the intraday, and later market has made an attempt to show upside recovery again yesterday and today also made a minor upside recovery and finally closed at the lower levels. This is the daily intraday time frame chart. On the daily time frame, we have seen formation of negative candles in the last couple of sessions. What we can observe on the daily chart is the higher tops and higher bottoms. Recently, we have seen Nifty forming highs around 21,834 levels and declining in the last consecutive sessions. What it is suggesting is that market is showing some signs of tiredness at the higher levels. A reversal is forming at the higher levels around 21,830, 850 odd levels, and market is in a corrective mode. Currently, market placed at the edge of the 10-day exponential moving average support, which was sustaining in the last couple of months, and this is not a good sign. Once it breaks below this 10-day EMA around 21,500 odd levels, the next important support of this 20-day EMA, which comes to around 21,250 levels. So a move below 21,500 is likely to Nifty likely to test the lower levels of around 21,250 as well as the low of 21st December's around 20,980 levels. These are the two supports for the Nifty. Market seems to have formed a short-term top reversal around 21,834 levels in a corrective mode. On the weekly time frame, the long-term trend of Nifty remains intact. What we are observing is a short-term downward corrections. Even as monthly time frame, we can observe a sharp, decisive upside breakout of multi-month resistance around 20,000 odd levels in this month, and market witnessed sharp upside momentum in the last month. In fact, witnessed sharp upside momentum in the December month. So normally, technically, we believe whenever we see such a sharp movement on in the underlying, we normally tend to see some consolidation in the next sessions, which are expected to be a trend continuation pattern. This is what exactly happening in this month. Market is showing consolidations, and as per the long-term chart, these consolidations is expected to be a buy on dips opportunity. Let's come back to the smaller time frame chart. We have seen a formation of highs, and whatever the supports we have mentioned around 21,250 and 21,000, 20,980, 21,000 levels is likely to offer support for the market, and we could see upside bounce in the near term. On chartically, in the broad market, looks like very positive in a mid cap. This is a mid cap chart. It is continuously moving up, outperforming in the last few sessions. Though Nifty declined from the higher levels in the last two sessions, this broad market indices are continuously moving up. They are showing consolidation, but the main trend remains up. Still, there is no indication of any important reversal pattern forming at the higher levels, both mid cap as well as this small cap as well. Similar kind of a chart pattern is formed in the both mid cap and small cap. Consolidation movement at the higher levels. We have seen higher new all-time high formations in the last session, but in this today's session, this broad market indices have shifted into consolidation. Chartically, there are mixed trend. PSU banking, we have seen outperforming today after the range movement of last 3-4 sessions. It has moved up today and expected to move up. Overall, short-term chart pattern is looking positive. And the realty, we have seen pharma and realty are looking very well. Realty is also showing after a small decline of last session, moved up today and near to the new all-time high levels, placed at the support of a 10-day EMA. The trend remains positive for this. sector. And pharma, we have seen witness a sharp upside momentum in the last 6-7 sessions. And after the sharp up move of last session, the pharma is continuously moving up, placed at the highs of around 17,423. So PSC is also looking positive, continuously looking positive, placed at the support of 10-day EMA, placed at the higher levels, but trend remains positive for the PSC as well. And so net to net, PSU banking, pharma, realty, PSU are looking positive at this point of time. And other stocks like IT, metal, and automobile sectors have declined and slipped into decline. Look at the metal charts. Metal, after a sharp up move, has reversed down after the formation of doji type of a candle, a long bear candle, which indicates that a reversal pattern for the metal. I'm expecting some more decline for the metal, at least for the short term. After that, we could see a metal bouncing back from the lower levels. The next sector is IT and automobile. In this IT, we have seen distribution type pattern forming at the higher levels in the last few sessions, and finally this range bound action has witnessed into a downward correction, downside breakout for the IT stocks. Today declined by 2.5%. The overall chart pattern is looking weak for the IT, and we could see some more decline in the at least next few sessions. And the another one was the automobile sector. Automobile sector was moving up over the last few sessions, and after that it has reversed its trend. Yesterday we have seen decline in the automobile sector. Today also showed decline with the consolidation movement. So net to net, the overall chart pattern is looking slightly negative for the Nifty. We could see some more decline. At the higher levels, we have formed a short-term top reversal around 21,834 levels. Immediate supports are open. Once the Nifty breaks below that 10-day EMA around 21,500 odd levels, we could see Nifty sliding down to 21,250 and even 21,000 as well in the next 1 to 2 weeks. At the same time, broader market is still intact. They are outperforming the benchmark Nifty. We could see some traction, but at the same time, we advise to keep a strict stop loss. One has to be cautious at the higher levels, especially for the mid and small cap segments. Even though they are not showing any decline, but if Nifty continues with decline another one for the short term, then we could probably see the broad market indices reacting to the downward. So one needs to be cautious at the long and at the same time place a strict stop loss. And other sectors like there is a sector rotation is happening in the market. PSU banking, pharma, realty, PSC sectors could give us an opportunity to go along. That's all from my side. I now over to Mr. Devarsh.
Okay, so to conclude, we have Am I audible, Nagaraj?
Yes, you are audible.
Okay, so now in order to conclude, basically markets are looking like there is a correction, imminent correction. The sectors where we can hide while markets correct are PSU banks, the pharmaceutical and FMCG. IT sector is looking particularly weak, where we could see some kind of a correction in few days. It is better to be little safe. If the traders are there in the derivative side, or you have a higher leverage positions, make it light. Try to create some margin, and also keep a room in long-term portfolios. Certain amount of cash can be raised in the long-term portfolio so that as and when the market comes down, we can invest the money in our favorite stocks. So the theme of the webinar this time is that after many months of extreme bullish markets, we are seeing the first sign of correction. This correction will accentuate if market were to fall for 3-4 days continuously, and that will lead to some kind of a selling in the market. So till now, we have seen hardly correction of 1 or 2 days in the rallies, and then markets have recovered to new highs. This time it could be different, and we have to be cautious to keep the money which has been earned. It is more important to preserve the capital which has been generated through the bull market rather than to risk it at such a juncture. So that's the advice from our side. Now, if you have any questions, you can ask in the question box. type in your question and we will be more than happy to answer. So overall, Nagaraj, by the time the question queue assembles, what kind of sectors are looking particularly weak? You mentioned IT has broken the recent averages. Any other sector where investors or traders need to be extra cautious?
Yes, Devarsh, along with the IT, automobile and the metal sectors are looking weak right now. Metal, as I mentioned, it was moving up continuously over the last 7-8 sessions, and technically we have formed some kind of a doji kind of a pattern and a red negative candle. Technically, that indicates that a short-term reversal pattern is on the cards, and some more decline could be in the next few sessions for the metal sector. And auto as well. Auto was.
Yeah, go ahead.
Yeah, automobile was also moving up continuously. Recently, we have seen automobile sector reacting from the higher levels and currently placed at the 10-day EMA. And overall chart pattern is indicating that this 10-day EMA could be broken. So auto and after the IT, auto and metal could see some selling pressure at least for the short term.
Yeah, so Varun is asking whether to hold or exit metal stocks. So I would advise that if you have trading positions on the metal side, it is better to be cautious. Devarsh Patel is asking about individual stocks. We won't be able to answer any individual stock specific query in a public forum. Please ask it in the research group. Miss, I don't know how to pronounce the name, but whether to enter the basket Super PAC 2024 or not. So I think those people who are long-term investors, I would recommend to start the SIP into 2024 Super PAC basket every month, allocate an amount, and over the next 12 months, you can gradually enter these stocks. All right, I think we have answered all the questions which are there. Thank you everyone for joining, and I hope you have a profitable weekend. That's all for this webinar. We can conclude.